First of all, check. Sorry, I just had a realization that I opened up, said, "Can you guys just give me a one if you can hear me?" Because I don't want to be standing here talking to myself. And lo and behold, I was standing there talking to myself. So part of what we're going to be covering is essentially how it's important to be able to create your wealth plan in building a property portfolio, an asset-backed portfolio. So first thing we're going to do is we're going to talk a little bit about your legal entities, so how you're going to be buying. Then we're going to be talking about bank accounts, setting up bank accounts to be able to build your portfolio. The deal model, so how we actually do deals, how that works for you guys, whether you're UK-based or international. So if you're tuning in from offshore, I'd love you guys just to give me a 1 if you're tuning in from offshore and you're not UK-based, give me a 1. And if you're based in the UK, please give me a 2 in the chat box. Okay, if you're based in the UK, please give me a 2 in the chat box. It'll be interesting to see who we've got from all around the world. And likewise, for those of you that are catching this as a recording, I'd love it if you guys can actually give us the comments, because we do actually still look back at the comments. Kev, can you scroll down, please? Okay, perfect. Excellent. Good stuff. Okay. So third thing we're going to be talking about is the deal model. So how the model works in terms of deals, how we actually tend to work through things. Then we're going to be looking at your financing, so how you finance your property investment deals. Okay, here in the UK. So how you're going to be able to get financing, any restrictions and stuff you need to be aware of. Then it's going to be your minimum values. So, are there any restrictions on what types of properties you can buy as an international as well as the UK? I'll be going through both, but it's useful for you guys to get some insight on. And then, excellent. So we're getting loads of comments, which is really good. And then we're going to be going through your capital requirement. How much money do you need? If you'd like to know how much money you need to be able to build your portfolio, please do me a favor, just give me a 5 in the chat box. If you want to know how much money you need to start to build your portfolio as a UK national or as an international, give me a 5 in the chat box. Petrus, awesome, from SA. Good stuff, brother. I absolutely love it. I know I sound like a pommy now, but I promise you, it's hometown. I love it. Super cool, man. Super cool. Then next, we're going to be talking a little about the number of deals that you can expect to be getting in your portfolio. So the number of deals you can expect to get in your portfolio with the amount of funds you have available. Okay, it'd be useful to know how many deals you can get for the amount of money you've got available. So that's part of what we're going to be covering. And then we're going to go into a couple of exercises for you guys to go away with. And that's it. So that's the session, what we're going to be covering. So first and foremost, the things that we're going to be talking a little bit about is we're going to talk a little bit about your legal entities. Okay, your legal entities to be buying. Now, I'm going to be doing a little bit of iPad work. As you see, my iPad screen is right behind me. Benefits of a green screen. Okay, you can actually see what I'm doing on my iPad here. Okay, so Taro's on it. Okay, so first and foremost, we're talking about the legal entity. Okay, so your legal entity to buy. Now, we touch on this quite often because it's useful for you to understand. Okay, in terms of legal entity, you yourself are a legal entity here in the UK. If you're not a British national, you're a legal entity in the country where you are. Okay, you are the same as a business or a company. You are a legal entity, you have your own tax, etc. Everything is set up for you as a person. And in exactly the same way, a limited company is a legal entity. Now, if you were to buy properties here in the UK as being an international, okay, what you would end up doing is you'd start to have some challenges around finance. Now, there are finance options available. The challenge is it would be difficult for them to chase you personally, as opposed to being able to chase a UK-based limited company. So in terms of as an international, you're not going to be buying properties in your personal name, or I would advise against it. Okay, you're typically going to be buying properties under a limited company. Now, setting up a limited company is super simple. Okay, we've got a few people on what we call our power team, so it's our team of people we work with who can assist you with setting up the limited companies. But essentially, you speak to any accountant in the UK, they can set one up. Prices vary depending on how they're doing it. So there's lots of companies out there that can assist you as well. But essentially, if you do it yourself online, it'll cost you about £15, which is like nothing. Okay, you just got to make sure you have an accountant set up who does all your filing, so paperwork filing, company filing, as well as all your tax filing. Okay, that's the important stuff you have to make sure you get done. So setting up a limited company, super sweet and easy. As a UK resident, as a UK based person, Kev, can you just keep scrolling on both for me, please, just so I can keep an eye on the comments. So as a UK based person, Okay, you can buy your property in your own personal name. There is nothing stopping you doing it. The only thing is, although you will tend to find that you get better interest rates with the mortgage lenders, for now, okay, the biggest restriction that you're going to tend to find is your tax benefits. So there's, I think it's called Section 24, where they have a taxation where you used to be able to claim your mortgage as a tax deductible, your mortgage cost as a tax deductible. Okay, and that is no longer going to be the case. I think 3/4 so far. I think at some point, either this year or next year, it's going to be in, so you can't claim any of it as a tax deductible. And what they're trying to do is they're trying to professionalize the industry. So my suggestion, if you intend on buying multiple properties, is get yourself a limited company. If you only want to buy one or two, you know, it's not such a huge deal if it's in your own personal name. Just understand that the tax offsets won't be of great benefit to you. Okay, just something to consider. Also, in a limited company, it's much easier to pass the properties on to, any future generations or anyone else, because you're selling shares as opposed to selling property. Therefore, your taxation is significantly lower. Okay, food for thought. So in terms of the legal entity, okay, my suggestion as an international is you set up a limited company. Very simple, very easy. If you get stuck on any of this, just feel free to reach out. Okay, we've got a lot of mentorship students from all over the world. We got all through Asia, all through Central Europe, Abu Dhabi, I think it's Dubai. We've also got Sweden, so Scandinavia. So we've got mentorship students from all over. Okay, and they're busy using our systems and our models, exactly what I'm teaching today, on how to build UK-based property portfolios and earning their money in pounds. Okay, especially if you have no confidence in the currency of a country, it's a great way to be able to hedge your bets or give yourself some security. Okay, so that's the first thing. So what legal entity? Okay, the second thing is you need to consider is your bank account. Now, mortgage lenders need somewhere they can send the money. Okay, because bear in mind, when you get a mortgage application, they send money. Okay, and that money has to go somewhere. Now, often it goes into the purchase of the property, but the thing is, they will not lend you money unless you have a UK-based bank account. Now, again, this UK-based bank account is typically not going to be in the name of you personally. It will typically be in the name of your limited company. Now, setting up a bank account used to be, for quite a significant time, very, 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 very challenging here in the UK. Believe it or not, it's become significantly easier since they've brought on these online bank accounts. So you've got the likes of Revolut, Tide, Starling Bank, I can't think of any others. But there's about 4 or 5 of them, okay, online banks that you can just go to, you put in your application, you supply your company registration details, and done, you've got your bank account. Okay, so what once was a very challenging thing is very simple. So you have to get yourself a bank account set up. Without a bank account, you will not get lending. Okay, so that's the second thing. Now the third thing, and this is where things start to get a little bit more interesting, is something called the deal model. Okay, so we do a model called the BRR model. Okay, the BRR model. And I very much urge you to pay very close attention to what we're about to go through, because I'm going to cover a lot of ground very, very, very quickly. So just as a check-in, who likes to be able to get the most value out of your money? Okay, to get the most value out of your money. If that's you, just give me a Y in the chat box. If you like to get the most value out of your money, just give me a Y in the chat box. I just sort of want to check in. Okay, because if you do, then this will all make sense to you. Okay, so if you do, then this will all make sense to you. So give me a Y in the chat box. Excellent, excellent, good stuff, guys. Okay, so the BRR model, which basically stands for buy, refurbish, refurb, and then refinance. Okay, so that's the model that we're working on. Okay, the BR, buy, refurbish, refinance. And typically how it works is you end up looking for houses that we tend to call smelly houses. Okay, smelly houses. Okay, I'm just going to scroll this up a little bit so you can see what I'm doing. Okay, so smelly houses, that's what we like to buy, smelly houses. Now, smelly houses, do you think a smelly house would be easier or more difficult to buy for a good discount? Okay, easier or more difficult than a new, fancy, plush, beautiful house? Easier or more difficult to get for a discount? Okay, it's easier, right? It's definitely easier to get for a discount. So you buy the property for a discount. Okay, and I'm going to give you some examples in a minute. So you buy the property for a discount, and then what you do is you refurb the house. Okay, refurbish the house. You tidy it up, get it up to its maximum value. Okay, you increase the value of the property through the refurbishment. At which point, the mortgage lender will come out and they will value the property Wow, okay. It's a terrible roof. Okay, they will come out and they'll value the property for you. And the value of the property will have gone up, providing you bought the deal right. Okay, we'll go through that a little bit more in a minute. Okay, so then you get yourself a nice property where you've managed to buy the deal right. And as soon as the value's gone up, you take the house to the mortgage lender, and what they'll do is they'll give you a mortgage. Okay, which is typically somewhere around 75% of the value of the property, which equates to money, long and short of it. Now, this is a live example, or this is an example of how this typically tends to work. And this is really cool. For those of you that haven't watched any of our previous videos, this is really cool. A couple of you have watched some of our videos, so you'll go, oh, okay, yeah, no, it's fine, I've seen this before. But those of you that haven't, this is really cool. Okay, so you get your smelly house, okay, and you buy it for, let's just say, £60,000. Okay, so that's your purchase price, 60K. Okay, nice and simple. Then you refurbish it for, say, 20K. Okay, let's just say your refurbishment costs somewhere around £20,000. Okay, and then you have other costs. So your buying costs, stamp duty, legal fees, mortgage brokerage fees, whatever fees and costs that you have associated with buying the property, and that equates to somewhere around £5,000. So you're all into the deal for 85K. Okay, you're all into the deal for 85K. Nice and simple. Now, the important thing to consider is, does any of this have to be your money? Okay, does any of this have to be your money? It has to be money. It has to be legitimate money. But does it have to be your money? Okay, and the answer is obviously no. Okay, you can raise finance through potentially a percentage through a mortgage lender or through a bridging company. Or you can do it through an investor or a business partner. Technically also a credit card, although I advise against it. But technically there is a way to do it. Okay, so it doesn't have to be your money. Let me be clear. Okay, but all money invested, whether it's yours or somebody else's, 85K. Right? And then, because of course you refurbished the house here, so it's refurbished, so the value's gone up. So then you take the property in its new, fancy, beautiful condition to a mortgage lender. And you say, hey, look, I'd like you to refinance my property. And the mortgage lender takes a look at the property and they say the new value of the property is 100K. Now, let me be clear on something. If you do not know this figure before you buy the property, you are gambling. Okay? If you do not know this figure before you buy the property, you are gambling. You need to know the value of the property in good condition long before you buy it. Okay? That's the whole premise of how this works. Otherwise, how do you know it's a good deal? Now, that forms part of what we teach in our 3-day trading. Part of what we do in our mentorship program is to show you exactly how to do this. But it's important that you need to understand that you need to know that value so you can calculate backwards from that point to kick off. Okay, and the mortgage lender will then give you a mortgage, typically as an international or as a UK lender, doesn't matter, of around 75%, which in this instant is 75,000. So you've invested 85,000. They've just given you back 75,000. Which means technically you've bought this house for £10,000. Okay, that's it. Like you bought the house for £10,000. Let me just check in. Who's okay for buying property for 10K? Who's okay with spending 10 grand and ending up with a house that's worth 100,000 and it's got over 20,000 in equity? Who's okay with that? If you're okay with that, just give me an I in the chat. Let me just check in. Because let me be clear, there should be each and every single one of you that's watching this today. Okay, if you're okay with that, give me an I. Okay, good. Now, of course, you've got 10,000's worth of equity, but the house is worth 100,000. Okay, your mortgage is worth 75,000, which means you have equity, i.e., your money, in the house of 25,000. So you've paid £10,000 to have a house worth to have £25,000 worth of wealth. So you've more than doubled your money, straight off the bat, okay? More than doubled your money. But why do you think we're buying property? Why do you think the big pull is for investing in the UK? What's the biggest advantage in this type of property, do you think? Okay, what is the very first priority of every property investor, or should it be? Okay, it is cash flow. It is cash flow. So let me give you a quick example of something. So this is the deal model I'm just going through right now. Okay, so for a deal like this, your typical rent for this type of property may be, say, £600 per month, per calendar month. Okay, then you're going to have a mortgage cost of probably somewhere around 185. Okay, then you have some other costs. Your lettings fees, your managing agent that manages the property on your behalf. Whether you're UK and international, it doesn't matter. Okay, because your time is vastly more valuable than your money. I can promise you, because you can always make more money. If you ain't got no time, you have no use for money. Let me be clear. Okay, so you get a lettings agent. Okay, and this is called your management fee, which is typically 10%. Okay, let me just scroll it up so I'm right in front of it. Okay, it's typically 10%, which equates to 10% of your rent, which is £60 a month. And then you have your operating expenses. So this covers maintenance, insurance, and voids, all of that kind of stuff. This is monthly operating expenses, your MO. This also equates to somewhere around 10%, which is another 60. Okay, now that gives you a net cash flow, if my math serves me right, of £295 per calendar month. Okay, that's per month. Okay, that's per month. Now, if we take that into account across the entire year, okay, so we times that by 12, okay, gives you, give or take, about 3,500. So I think it's 3,400 and, so let's just do 3,400, give or take. Okay, give or take. Net income. And this is where the deal model comes very, very interesting, is because you've essentially paid £10,000 to buy a house where you now have £25,000 worth of wealth and an income for the rest of your life of over £3,000 per year. And that doesn't even take into consideration your any capital gains, so the value of the property going up through time. Doesn't take into account the rental increase, which is typically 3 to 5% a year. It takes none of that into account. Okay, this is the model that we work on. Now, as an international as well as a UK-based investor, it is exactly the same. There are a couple of things you need to consider. Okay, first and foremost is finance. Okay, one of the first things you need to consider is finance. Because as a UK-based investor through a limited company, it's much easier for you to get finance on lower value properties. So your purchase finance is not the issue. So getting finance for the purchase, you can buy houses as cheap as 30-odd thousand. There is lenders out there that will do it. Okay, they're called bridging finance, which is high interest lending. Okay, now typically people would be going to someone like Together Finance. That's a pretty standard one. They've been a little bit tricky in the market, but if you go directly to them, they can actually assist you to get lending on this. The thing you need to be aware of is the end value. Okay, now if you remember what we talked about over here, okay, it is the value of the property there. So that end value, which if I'm not mistaken should be over there, okay, that end value, that as a UK-based investor, so you live in the UK, okay, as a UK-based investor, that property needs to be worth at least £50,000 at that value when your work is done. Otherwise, you're going to struggle to get lending in a limited company. You just will. Okay, so that's the first thing. As an international investor, that value needs to be at least £70,000. Okay, I will explain why very simply. Because if you do not pay your mortgage, the mortgage lender has to repossess the property. As a UK-based person, it's much easier to repossess a property from you than what it is when you're an international, and therefore costs go up, and therefore it doesn't make sense for them to lend on lower value properties. Okay, very simply. Okay, but just useful for you to understand. So that is your financing options, and there is lots of options for financing into a limited company, providing you have a good broker. A broker, mortgage broker, is the guy who will help you get finance. They are worth their weight in gold. We've got an amazing broker who heads up the Hong Kong and Singapore division for all of the finance for our mentorship students that are international, and he is wonderful. You can get lending rates as low as 3%, just over 3%, as an international investor buying buy-to-lets here in the UK, which is obscenely low. That's almost as low as what we can get over here, which is about 2.5% as a UK-based property investor. Okay, so very, very, very good rates. That makes it much easier for you to get a good positive cash flow or net income from your property. Okay, so and then also your capital required. So how much money you typically need for a deal. So as a UK-based person, you typically need somewhere between 25 and 35,000 pounds to get involved in a property deal here in the UK. Now that will cover the cost of your deposit, okay, which is your 25% when you buy it. Okay, it will also cover the cost of your legal fees, your stamp duty, your brokerage fees, okay, and all your basic fees, and then also your refurbishment costs, as well as upkeep of that property through a period of time. Somewhere between 25 to 35,000 pounds. Now, for those of you tuning in from in Asia, so places like Hong Kong and Japan, where prices are astronomical, okay, you'll understand that that is a fantastic deal for you to be able to get involved in, because instead of you saving up hundreds of thousands, you can actually invest in the UK and buy property with as little as 25 to 35,000 pounds. It is wonderful, okay, absolutely wonderful. Now, as a international, as a UK based, it's 25 to 35,000. As an international, it's somewhere between 30,000 and 40,000. So only 5,000 higher, just to account for the fact that the value of the property has to be a little bit higher post refurbishment works. Okay, somewhere between 30 and 40,000, you should be fine to be able to get a decent deal at that run. Okay, and then last but not least, it is a quick example of what you can do. Okay, so let's just say you go, okay, well, I'm based in Hong Kong. I've got a couple of apartments here. I can release some equity. And the equity I can release from one of these apartments through getting a mortgage would equate to, I don't know, let's just say £300,000. Okay, as an example, 300K as an example. Now, obviously, you're going to have cost of finance. Okay, cost of finance. So that money might cost you, to be able to upkeep and maintain, maybe £300 a month. Okay, that's like a mortgage cost, just an example. I kind of feel like that's a little bit light. So why don't we do this? Why don't we overestimate this at £500 a month? So you can understand, like, this is not about making things look attractive. This is amazingly attractive irrespective. So let's say it costs you £500 a month, just for the cost of having that money. Okay, you get a mortgage on the property, you have to pay the mortgage lender. Now that's £300,000. Your typical buy-to-let, okay, this is UK-based or international. Your typical buy-to-let will have money invested, so money left invested, which if you scroll back to over here, this 10,000 over here, so after you refinance the property, you still have 10,000 in the house. This is called your money left invested. Okay, that is your MLI, your money left invested. Okay, so your money left invested in a typical buy-to-let is about 15K across the north of England. Okay, depending on how you're investing, the strategy, etc. But a typical buy-to-let, okay, which is a single-family residence, is somewhere around 15K. Okay, and then typical cash flow. Okay, so this is your income after all expenses. So you've got no more expenses to cover. Okay, is somewhere around £250 per calendar month. Now, if we do the math, so you're starting here with £300,000. So what we do is we go, okay, well, how many houses can I buy using that £300,000? Now, if my math is correct, that equates to, give or take, 20 houses. Okay, 20 houses. Now, those 20 houses will have an equity, because bear in mind, the money you've got invested is only 15,000 per house. And the equity is, let's say, 25,000 per house, as an example. Okay, now it could be 20,000, could be 30,000, who knows, depends on where you invest. But let's just say your equity is 25,000 per house. What is 25,000 times by 20? Okay, it equates to, give or take, £500,000. So what you've just done is you've just turned your £300,000 worth of whatever money into £500,000 worth of money. That's free money. Like, I don't care what anyone says. That's free money. And then on top of that, you also have your cash flow at £250 per month times by the 20 houses, okay, which equates to 5,000 per month. Give or take. It'll be somewhere in that ballpark. So about £5,000 a month. Now, I understand you have cost of finance. If you look back here, it's going to cost you £500 for that. So you go, okay, well, you do the 5,000 minus the 500. Okay. equates to £4,500 net income. So after all expenses, pre-tax, because of course tax is what tax is. We've got a couple of tricks for tax, which we go through on other calls, other sessions. But just, Kev, can you scroll, please? Okay, sorry, Mohammed, I'm missing question. Okay, move a little bit to your left. Okay, yep, so, sorry, I'm keeps trying to scroll so you can see. Okay, so what you've done is you've taken your 300,000 worth of equity from a property, and you've made that into 500,000 worth of equity in other properties, okay, instead of just your property and other properties. And then on top of that, you also made that give you an income of £4,500 a month net after taking into account the cost of your money. You are potentially sleeping in the thing that could give you financial freedom for the rest of your life. And the beauty is, you can utilize those funds in a very strong and stable economy such as the UK. And sure, we have our ups and downs like everyone else, but this is a more stable economy than most. Okay? Now, that's basically the deal model. So that's the model that we tend to work with investors on. We've got an investor based over in Singapore. She's releasing 700,000, and we're expecting to get her over 10,000 net a month cash flow. Okay, 10,000 a month net cash flow, as well as creating an equity position of around $1 million. Okay, I think it's about 900 and something thousand we worked it into. And that is purely creating a wealth plan for enabling it to build a strong property portfolio in the UK, based on a very strong asset, which is buy-to-lets, because they aren't building enough houses. The demand is almost double for the number of buy-to-lets needed for the number they are building every single year. Okay, it's a small island. It's not getting any bigger. They're not building more land. Okay, so it's a very, very, very valuable asset here in the UK. Okay, so that's one. Then we've also got a client who's based over in Dubai. We're looking to create a large portfolio with. Another one who spends half of his year over in Tenerife, who's looking to release some money and hopefully get up to a 15 to 20K a month cash flow. Okay, net. Okay, off the back of this. So if you're in a position where you have some funds available and you want to go build your portfolio, do just let us know. Attend one of our events. We'll go through the whole model, the whole structure, so you understand how everything works. Now, before we actually go into the exercises, I just want to check in. Has this been useful for you guys? Okay, if it's been useful, give me a 2 in the chat box. If it's been useful, give me a 2 in the chat box. Okay, if it's been useful, give me a 2 in the chat box. As a matter of fact, if you found this useful and you're enjoying this and you enjoy the stuff that we're covering, please give me a like or a share. I would love you guys to be sharing these videos, getting it out to a lot more people, so we can impact a lot more people and impact a lot more lives. Okay, so please give me a like or a share, and I'd love it if you guys can share. That would be awesome. Or hearts. I don't know how you do the hearts. I think some people do hearts for these sessions. But yeah, if you can do that, that would be absolutely smashing. Okay, so if you like the content that we're covering, give us a heart, give us a like, give us a share. Okay, super cool. All right, awesome. Thank you, guys. Right, okay, so now I'm going to give you guys some exercises. Okay, so an exercise to get off the back of this. Tony, I don't know how on YouTube either, man. I only do it on this side of the camera. I'm not on that side of the camera. I'm sure there must be a button somewhere where you give a heart or something and it pops up. But thank you for the thought and feeling around it, which is awesome. Okay, excellent. Thank you very much, Mohammed, and thank you for everyone else that's giving us all the likes. It's really appreciated. And feel free to pop onto Facebook if you can't figure it on YouTube. It'd be awesome. Try and share it. Try and tell your friends about this. I love what we do here. It's very cool. Okay, so now we're going into your exercises. So your exercises to move you on. So we've got 3 exercises for you guys. So the first thing what I want you to do is I want you, as an international, as a UK investor, I want you to consider what strategies you would like to do. Now, there's a series of different investment strategies. So you've got buy-to-lets, which is a single standard family just living in the hearts are in Facebook. Natalia, awesome. Thank you for letting me know. Really appreciate it. There's a thumbs up under the video. Oh, okay, perfect. So on YouTube, there's a thumbs up under the video. Just give us a click on that. That would be awesome. Thank you. But yes, so in terms of strategy, you got buy-to-lets. You got flips, where you buy a house, add value through refurbishment, and then sell it. Okay, this is called a flip. And then finally, you've got something called HMOs, which is where you rent the property out by the room. Much higher risk, much higher return. Okay, and certainly much higher work. I won't sugarcoat or bullshit you all. Definitely more risk, more return, but definitely a lot more work. Okay, and if all you're looking for is passive income, don't do it. Okay, buy-to-let is much better. And then you also got something called deal sourcing, where somebody negotiates the deal on your behalf, and you pay them a finder's fee. Okay, you pay them a finder's fee. That's called deal sourcing. Okay, so yes, the very first thing I want you to do is I want you to select your strategy. So what would you like to do? How would you like to invest? Okay, that's the very first thing. And if you want to put it up in the chat, please feel free to put it up in the chat. If you're looking for buy-to-lets, HMO sourcing, or flipping, do just drop it into the chat. It's useful for me to see what strategies everyone else is looking at. It's very cool. Okay, the second thing is I want you to take a look at the UK as a whole. Take a look at the north of the UK. That's where you're going to get your cash flow. Okay, that's where you get your best returns or your best yields, as some people call it. Okay, take a look all the way in the north of England and go and select an area based on some research you do. So just do some research. Okay, and select an investment area. So the very first thing is select your strategy, then select an investment area where you would like to be investing. Okay, and then finally, I want you to connect to a power team. Okay, so connect to an accountant to assist you in setting up your limited company. Connect to a mortgage broker to assist you with finance. Connect to a solicitor who will help you with the legals. Connect to a sourcing agent if you're an international and you aren't able to view properties yourself. Connect to a sourcing agent. Okay, and then off the back of that, they should be able to assist you to find deals. If you would like deals and you would like us to supply them, all you have to do is reach out to us. I think just make sure you subscribe to the channels. So obviously we got the Katana Property Channel, which is a Facebook group. We've also got the Katana Group Limited, which is a Facebook page. Okay, make sure you guys like and follow that page. And then, of course, we have the Katana Property Channel on YouTube as well, where we cover a lot of stuff on all of these. And we're going to be talking a little bit about sourcing. But please feel free to message us. So send us a direct message through either of those forums if you would like us to assist you in finding some deals that meet exactly the requirements that we discussed earlier to be able to help you build your portfolio. Vice versa, if you'd like us to teach you how to fish. Okay, not physically fish. Obviously, this is us giving you a fish. If you'd like us to teach you how to build your property portfolio yourself without us having to find the deal for you, please let us know. You can attend one of our live 3-day events absolutely for free. We're going to be running one again on the weekend of the 10th of July. Okay, and you can attend the whole thing absolutely for free. There's no cost. This isn't about the money. This is definitely about helping you build your portfolio and creating your financial freedom. Okay, so if any of this sounds at all interesting to you, please give me a yes in the chat box. Okay, and then finally, if you're also going to do your homework, okay, give me a 1 in the chat box. I'm interested to know who's actually going to follow through on the exercises on this. Okay, who's or going to try to follow through on the exercises. If you are, give me a 1 on the chat box. Okay, it is important that I know whether you guys are going to do this. Because if you're not, then I'm going to stop setting the exercises and just going to give you guys a bit of content. Okay, but just to sort of check in, like to fish. Okay, excellent, Ajbinder. Please feel free to reach out to us. Just drop us a message on one of our chat boxes in either the Katana Group page, the Katana Property Channel Facebook group. You'll be on one of those now, probably on the page, or vice versa. You can email us, which is customerservice@katanagroup.co.uk, and one of the teams able to take care of you from there as well, which is Marie. She's absolutely wonderful. Okay, but yes, so if you guys have had some value and you've enjoyed what we've covered today, like I say, please make sure you give us a thumbs up or a heart or a like, and it's most certainly a share. I'd love it if you guys can share these videos as much as possible. Try and get it out there to try and help more people build their property portfolios. Now, before we wrap up, if you have a question that you would like me to answer on either the content we covered today or anything else, please just give me a nice big Q in the chat box. Okay, a Q in the chat box if you have a question, and then write your question afterwards. I ask you to write a Q because if I end the stream while you're typing a question, it is very frustrating, and I've been there before. Okay, so if you'd like to ask a question, on absolutely anything whatsoever. Obviously, be as personal as you like, but whether it benefits you or not. Okay, perfect, Tony. So I'm going to give you a second just to get your question written down. So yeah, if you guys have got any questions, this is definitely your forum. This is a live free mentorship. Hopefully you guys realize I'm trying to give away as much value as possible in the time we have. I don't tend to do much sugarcoating or bullshitting or fluffing. I hate fluff. Everything I like is directly down the line, makes it very simple for you to be able to implement the information and move your lives forward. But yes, so if you guys have any questions, please give us a Q in the chat box and follow that up with your question. Just write it out, and then I'll make sure I answer your question. If, however, you do not have a question, please do me a favor, just write no question or no Q in the chat box, just so I know that I'm not going to be hanging around hoping that you're not just typing a message or typing a question out before we go. So if you have no questions that you need to get answered here, you feel like you've got all the value you need to get from me today, please write down no Q or no question in the chat box. That would be a huge help for me so I don't end up cutting you guys off while you're busy typing. So still waiting for Tony with his question. I expect it'll be coming soon. Although you may have already hit enter, unfortunately I have a lag on my side because of the captions. Hopefully you guys can all see the captions of everything I'm saying. Kev, are the captions working? Okay, can't see. No question, excellent. Thank you, Imogen. No question, excellent. Thank you very much, Leslie. Really appreciated it. Okay, it's interesting that no captions are coming up. It's a little bit of a pain. So I'm going to have to look into getting that set up. Okay, no questions for now. Still raising cash, Mohammed. Okay, no problems, Mohammed. Let me be clear. Without the deal, having cash in the bank doesn't matter. Okay, the important thing is get the deal and then worry about the money. I can promise you from so much experience in doing this. I built my portfolio with having nothing, absolutely zero bupkis. I was minus £40,000 when I started my portfolio. Okay, it's all about learning to raise finance, and the easiest time to do that is when you have a deal already in hand. Okay, so just as a little bit of a personal tip to you. Tony, I get the feeling your question is massive or Kevin needs to scroll down. Okay, cool. You know I have faith and I'm investing with you. This is not my question. Oh, okay, won't send. Okay, no problem. So you'll send me the question person. Oh, there we go. Okay, many people ask me, if so much money can be made and financial freedom is months or years away, why are you standing in front of us not free? Okay, so really, really, really important question, Tony. So I'm still building my portfolio. Okay, so we've got some properties and stuff, and that's all great. But what I'm doing is I'm creating a portfolio of relationships and partnership clients. Okay, so as part of what we do is we help people get to financial freedom through property throughout our trainings. And as you know, we don't take any part of your portfolio or any of your deals or anything. We just train you on how to do it, how to raise finance, etc. You build your portfolio. And when you get to a point that you are financially free, this is where we start opening conversations on partnership. So this is where you can get involved in some of our technology businesses. We can partner on some larger deals. I can partner with you on, let's say you want to be a coach, or you want to run some other business where you feel like my guidance will be of assistance. Then I take a small slice of that pie and help you build that into a multi-million pound business. And in turn, I would have a small piece of that. Okay, so I create a portfolio of shareholding positions within multiple little companies as they get bigger by coaching you and training you and guiding you to be able to do that and learning from my knowledge. Okay, so for me, it's not about money. Well, let me be correct. It's not all about money. This is definitely a much more personal game where I want to be working with you to build your portfolio and get you guys financially free. And once that is done, I have proven my value. My value is then proven 10 times over. At that point, then we start to talk about how you can add long-term value in my life as a turn of us growing together. Now, before I partner with people, I need to know it's a good fit, and I won't know it's a good fit until we've had that long-term relationship and bond. And that's why we do the mentorship in the way we do. Okay, I hope that answers your question. Absolutely brilliant question, and thank you very much. Obviously, I don't really need the money from this. Like, I'm doing this for free. This is all about giving back. In the same way someone gave to me, in the same way someone helped me build my portfolio over the years. This is about giving back and to be able to enable you guys to be financially free and pass on the legacy to your kids so they're financially free and so on and so forth. It's worth its weight in gold. That's payment enough. Okay, cool. Okay, awesome, Ashbinder. Thank you very much. Right, so I suppose that wraps us up for the session, guys. It has been an absolute pleasure to be able to hang out with you guys this evening. I hope you've all had huge value. You've taken a lot of value from what we've said. If you've enjoyed it and you've had loads of value, like I say, please give me a share, give me a heart or a thumbs up. Any of those would be absolutely grand. And like I say, if you're catching this as a recording and you're not live on this session, please feel free to drop comments in because we are still reviewing the chat. Okay, and I'm more than happy to answer any questions that come through in here, whether it's about our content or whether it's about me personally or within Katana or anything like that. Look, I'm here to help. That's what I do. I help people achieve their financial freedom. Right, guys, thank you very much for your time. I hope you have an amazing evening. I look forward to catching up with many of you guys next Tuesday, same time, 8 p.m., where we're going to be talking a little bit about some other cool stuff, and I hope you guys have a good one. Right, guys, thank you very much. See you later. Bye.